Welcome back, Focus Learners. Today on The Explainer, we're tackling a massive roadblock. So, you've decided it's time to take control of your financial future. You type how to start investing into your feed and bam, you are instantly overwhelmed. You're pulled in three completely different directions at once. One side is saying stocks are the only way to go, another is screaming that crypto is the future, and a third is promising you can make thousands a day trading Forex from a beach. It's totally exhausting. But today, we're going to cut through all that noise and find the absolute best market for beginners.
Okay, let's dive into this by starting with a bit of a hard truth. When most beginners look at these three markets, they usually ask, which one of these is going to make me the most money the fastest? And you know what? That's the exact wrong question. This mindset right here is the #1 reason beginners end up treating investing like a trip to the casino. They chase quick wins, they jump from strategy to strategy, and ultimately they lose their hard-earned cash because they're basically gambling, not investing.
So we need to completely pivot our mindset. The real question you should be asking on day one is which market helps beginners learn the right financial habits. Because true investing isn't just about scoring a quick profit. It's about building foundational skills, developing emotional discipline, and genuinely understanding how markets actually work. And to be honest, some markets are just much better teachers than others when it comes to building habits that will last you a lifetime.
To figure out which market is the best teacher, here's our roadmap for today. First, we'll look at the beginner's dilemma. Then we'll evaluate the three markets. After that, we'll figure out the best starting point. And finally, we'll build your investing path. All right, let's jump straight into Section 1, the beginner's dilemma, information overload.
So when you get hit with all this conflicting advice, it sounds incredibly tempting, right? Stocks are pitched as the safest, most reliable way to build wealth. Crypto is hyped up as the revolutionary future of money. And Forex? Well, that's pitched as the ultimate laptop lifestyle. They all promise massive opportunity, but here's the fatal trap. Most beginners don't just pick one. They try to learn all three markets simultaneously from absolute zero. Trying to juggle traditional earnings reports, decentralized digital networks, and global currency leverage all at once? Yeah, that's a guaranteed recipe for confusion, deep frustration, burnout, and some very expensive lessons.
Moving on to Section 2, let's evaluate the three markets: stocks, crypto, and Forex.
And this brilliantly illustrates the actual mechanics under the hood. Let's think about what you actually own. In the stock market, you're buying a small piece of a real, tangible company, and the scope is something like the S&P 500, the largest companies in the US. Over in crypto, you own digital assets, or networks, which is a market driven by decentralized apps and, let's face it, a lot of internet hype. And in Forex, you are trading literal national currencies like dollars, euros, and yen. It's a massive institutional market with over $7 trillion traded every single day. So the mechanics of these three arenas literally could not be more different.
Let's zero in on stocks first. When you buy a stock, you're purchasing a piece of a real, growing, productive business. Think Apple, Microsoft, or Amazon. Your focus naturally shifts to understanding their business models, their quarterly earnings, and their ability to provide long-term value to the world. And the really beautiful thing here is that the power of compounding does the heavy lifting for you over time. As these businesses grow and become more profitable, the value of your investment tends to increase. This is exactly why so many millionaires are actually quiet, long-term investors, not frantic day traders glued to 6 monitors.
To put that into perspective, historically, the S&P 500 has returned roughly 10% annually on average over the long term. Now, it's absolutely crucial to understand that markets fluctuate. You're going to have negative years and you'll have incredible years. But over the span of decades, this 10% average has proven to be one of the most reliable and battle-tested ways to build genuine wealth.
But then we look at crypto, and wow, the numbers here can be staggering. Take Bitcoin, for example. Back in 2011, it was worth around $1. Since then, it's traded above $60,000 at various points. I mean, this represents one of the most dramatic and rapid asset increases in the history of finance. It's that kind of parabolic growth that captures all the headlines and makes beginners feel like they're totally missing out on a modern-day gold rush.
But you can't look at the peaks without looking at the valleys. The other side of the crypto story is brutal volatility. Bitcoin has also experienced massive, crushing drops of 70% or more multiple times in its short history. That is the kind of drop that makes you literally want to throw your phone right into a lake. For an inexperienced investor who hasn't yet learned how to manage risk, this extreme volatility isn't just scary. It will completely destroy your portfolio and shake you out of the market at the absolute worst possible time.
Finally, let's talk about Forex, and specifically a mechanism called leverage. Leverage basically allows a trader to control a very large amount of currency, say $10,000, while only putting up a tiny fraction of their own money, maybe just $500. Now, on the surface, controlling a huge amount of money sounds incredibly exciting, right? But leverage is a massive double-edged sword because it magnifies both your gains and your losses. If that massive trade moves against you by even a tiny percentage, your actual losses happen incredibly fast.
And that double-edged sword is exactly why studies from multiple brokers reveal a really stark reality. 70 to 80% of retail Forex traders actually lose money. It's not because the Forex market is mathematically impossible to conquer, but because the level of risk, the speed, and the leverage is simply way too high for a beginner who's just trying to learn the ropes.
So the crucial point is, where should you actually begin? That brings us to Section 3, the best starting point, finding the right foundation.
Think of it like this. Learning to invest through the stock market is like learning to drive in a normal, everyday car. You learn the basic rules of the road, you build up your confidence gradually, and you safely understand how the whole system operates. Jumping straight into leveraged Forex or highly volatile crypto, that's like trying to learn how to drive in a Formula One car. Is it technically possible? Well, yeah, but the vehicle moves so fast and is so incredibly unforgiving that your risk of crashing on the very first turn is infinitely higher. Stocks naturally encourage the kind of slow, long-term behavior you actually need to survive.
When you start with that normal car, the stock market, you build some incredibly valuable foundational skills. You learn real risk management. You start to recognize market cycles. You master the absolute hardest part, which is the psychology of investing and controlling your own emotions. You learn how to block out the noise and hype and focus strictly on fundamentals. And here's the real secret. Once you build these core skills in the stock market, they transfer everywhere. They literally become your universal language of investing.
All right, moving into Section 4, building your investing path, a blueprint for the decades. Now, what's really interesting about this slide is how simple and effective a good foundation can be. Imagine you invest just $500 a month into a diversified stock index fund, and you get an average 8% annual return. After 10 years, you'd have roughly $90,000 sitting there. Now, that's not an overnight get-rich-quick success story, but it is real, undeniable financial momentum, and momentum without taking massive existential risks is exactly what creates lasting, generational wealth.
Which is exactly why the most rational, professional path for a beginner looks like this simple 3-step progression. Step 1, learn stocks. Build your unbreakable foundation with long-term investing principles. Really understand how money actually compounds. Step 2, once you have that foundation locked in, you can explore crypto, but you treat it cautiously, keeping it as a small, higher risk, higher reward piece of your broader portfolio. And finally, Step 3, approach Forex, but treat it for exactly what it is, a highly advanced skill that requires serious, dedicated education and unbreakable emotional discipline. You definitely don't jump to Step 3 on day 1. Mastering money isn't about wildly chasing the most exciting opportunity you see on your feed today. Look, markets are going to change, new technologies will inevitably evolve, and flashy new financial trends are constantly going to appear. But strong financial fundamentals, those will absolutely always matter. So, as we wrap up this explainer, I want you to reflect on your own next steps. Which market interests you the most right now? Stocks, crypto, or Forex? Take that answer and make the simple, empowered decision to start learning those fundamentals today. Thanks for joining me and keep focusing on building those skills.